All right, all right, all right. Monday, 6 p.m. Pacific Standard Time, just like every Monday, live and direct mortgage Q&A. We talk about more than mortgage. We talk about the real estate market. We talk about, um, housing, different things going on, and getting some really good conversations. I let the conversation go wherever you want it to go. I'm happy to discuss anything. I just got done listening to some cool information out there on the interwebs about this Evergrande property developer in China that defaulted on like an $80 million interest payment today. So it'll be interesting to see what happens with that as far as the mortgage markets and how that's affecting the mortgage markets today, as that quote unquote bad news seeps in and stocks take a dump. Mortgage rates get better. That's generally how it happens. There's uncertainty. There's any sort of bad news in the economy or whatnot. It generally fares well for mortgage interest rates. So rates got slightly better today. Not anything drastically better, but slightly better. And on that note, everybody always wants to know about interest rates. And so I'm going to jump to Harminder's question here. Has the interest rate gone up in the past 2 weeks? It hasn't. I was just looking at something for, I think Black Knight, who puts out data every single week. And they have, in the last day, in the last 7 days, in the last 28 days, how much interest rates have moved on different loan types, conventional, jumbo, whatnot. And most, like literally all loan types, it's fairly flat in the last month. I think it was like 11 basis point change was the biggest one on jumbo, and conventional is like within a couple basis points. Like the average across all the banks that they have in this survey, like 3.03 or 3.06, which I can tell you as a broker, I love seeing those averages up there above 3 when I know that my rates as a mortgage broker are lower, but nonetheless, really, really flat in the last month. So in the last 2 weeks, Harminder, rates haven't moved up nor down much at all. They have, because they do every single day. But altogether, if you look at rates 1 month ago, you look at rates today, pretty darn close. Studying to be an MLO. Realistically, how many houses bare minimum do you think averages in a year? So you're talking about how many loans you think you'll do as a loan officer? I can give you some data from my own personal experience. I can give you data from people that I've talked to and listened to, and I'm in a bunch of different coaching groups where I've graduated from being coached to now coaching a little bit. And in your first year, you'll probably, depending on what kind of scenario you're in, if you're in a scenario where you're all self-generated, right? You have to, every single deal you close is something you generated yourself, then you might only do 15 or 20. If you're in a situation where you're getting, leads, or you're working in like some sort of branch where you get to filter through those leads, you might make less per deal, but you might do 50 deals, 60 deals. The best advice I can give you is get in a position where you get to see as many deals as possible. And I had this conversation with somebody who reached out to me last Friday talking about studying, wanting to become a loan officer. And I think that in those first couple years, you do whatever you can to get in a situation, whether that's working as a junior loan officer, working on a team, working in an environment where you're getting handed leads, whatever it is, to see as many deals as possible, because there is absolutely no substitute for experience and seeing deals, right? You can't read guidelines to be an expert on how to communicate with clients and how to like look at the inevitable, like 50 bazillion different scenarios that can come up and whatnot. So, I think bare minimum, that also depends on what you're getting paid, right? Like what you get paid for self-generating a deal versus what you get paid, working in a call center where you're making 100 calls a day is drastic, right? Like one might be 10 times more than the other one. but you're going to do 10 times as many deals call center wise, right? So that would be something where I'd want to know what type of structure, what you're doing there. All right, who'd I miss? My buddy Joey. He was first on here tonight. Mona, hello. How you doing? Joey. He's pumped about the news. Home Possible, 5% down on a 2 to 4 unit starting mid-November. Yeah, that was a fun video for me to make, Joey, because I know that a lot of people I talk to, a lot of people are investors, house hackers, first timers who don't necessarily have a big down payment, but they're pumped about one, home ownership, and two, real estate investing. This is the way you get both in one shot. And the best way to get both in one shot is 3.5% down FHA or 5% down Home Possible, which is a conventional loan. And so for those who qualify with the income qualifications needed for Home Possible, and that in your area you can get qualify for something that's a 4 unit, 3 unit, 2 unit with 5% down, it's going to be a cool product. And that's going to be available, like you said, mid-November. So I don't know why, Joey, like you learned about Home Possible and you're all about it. In this case, it's cool. In the other case where it's just on a single family, I'm like, bro, you're stressing about it too much, because the difference between 5% down conventional and the 5% down Home Possible was so minimal. Like, your mortgage insurance is a little bit cheaper, and okay, your interest rate is a smidgen better. But in this case, like 5% down versus 15 or 20, huge. So cool, man. All right, Maria, you've been MIA. Closed your house in LA County this past Friday. Yep, I told you. And this is a testament for people to see and hear and know that you're going to have disappointment. You're going to have offers not accepted where you are absolutely devastated. And being through that with hundreds of clients, I know. And so when I tell people this, I'm saying it from experience, that it's all going to work out. You're going to eventually get your offer accepted on a house that you're going to be so happy looking back. Oh my gosh, that first one I offered on, I thought I liked that house. I'm so glad it didn't accept it. Then that second one, I was kind of settling. I knew I was glad that one didn't get accepted. The third one, I was devastated. I didn't put in another offer for a month because I was so devastated. Then offer number 4 goes in, you get it accepted. And like Maria's saying, you know why those ones didn't work out. This one was the one. Congrats, Maria. Thanks for sharing. Closed last Friday. I'm pumped for you. And I know for a lot of people, it's a journey, right? It's not all sunshine and rainbows out there in the housing market. It's tough. And trust me, we might be triple digits now. When I looked at like my fully pre-approved column in my system, we were like in the 90s. I might have over 100 people fully pre-approved, and some of those people have been putting in offers for months. So, congrats to you. We got some more people to serve. Set to close on my house October 4th. Just had my appraisal today. Not sure on the results yet. Good luck to you. So, generally, if they did it today, if they actually did the inspection today, you might not get it back until Thursday or Friday. For whatever reason. I'm not going to knock appraisers. They've been super busy. There's more work than the amount of appraisers out there can get done. And so it's taken 10, 12, 14 days, 17 days to get an appraisal back. One thing I probably don't understand, and chime in if you're an appraiser, chime in if you know of an appraiser that can answer this for me. Why more so now than ever do I see an appraisal done and then it takes 5 to 7 days for the report to be written? Once you've done it, don't you want to bang that report out? Or are you doing like a week worth of appraisals and just going out and doing the inspections, collecting notes, and then like writing all the reports up 5 days later? That could be the case, right? So Maybe if my buddy Ryan Lundquist watches this after the fact, he'll ping me. He'll shoot me a text and say, "Hey, Matt, I was listening to your live. I was doing some reports, and here's why. Here's why the inspection might be done on the 20th, but I don't get it back to the lender until the 27th." All right, Zachary. Best of luck for closing on the 4th. You are welcome. You are welcome. Oh, there you go. See, dude, all these people getting their offers accepted. All these folks. Dude, check this out. This is wild. This is good. This is good stuff. This is like live market research right here. All these people putting in offers, 4 months, like Arnold here is saying, finally got my offer accepted. Zachary set to close. Maria just closed. Jorge Guzman in contract. Like 4 comments in a row. Everybody's getting their offers accepted. That's good news. And it's the same people that were frustrated. And like I told Maria and I've told other people, it's going to happen. Keep trucking. Don't give up. Offer will get accepted eventually. You'll be happy that the other ones didn't get accepted and the latest one did. So congrats to everybody who's in contract. Cheers to a smooth loan closing. Hello, I'd like to refi. John, thanks for joining. Bought in 2015 at 4%. Have about 150 in equity. 0210. Okay, self-employed, and this is tough. Business booming in 2021 was poor in 2020. Do I wait for another year to qualify? Well, with self-employed, we're going to look at if you've been in business for more than 5 years, you can use just 1 year of tax returns. But in your case, just 1 year, 2020, if it was crummy, that's not going to bode well for you, right? It's going to be a low number where you're probably not going to qualify. But if you have a booming 2021 and you've been in business for longer than 5 years, then you're probably right. You know, you probably wait until early 2022, file 2021 taxes. If you've been self-employed for more than 5 years, you talk to the loan officer, say, "Can we use just 1 year?" And they go, "Oh yeah, we can do, we can run it through LP. 1 year of tax returns is all that's required, and then qualify that way." So that's probably your best bet. All right. Thank you. I would consider a bank. What were we talking about up here? Yeah, I mean, ugh. You could probably learn bank, credit union, something like that. Or, you know, there might be a retail lender that has a branch set up where you can work underneath a high producing loan officer. I'd probably try that first. That's my advice to you, Chris, is a bank, you're going to get a lot of walk-in business, but my only fear is that like banks aren't really set up to be really efficient with mortgage. So you might learn about mortgage, but you won't learn anything about like high level, very efficient mortgage processes, where a broker or a direct lender who has systems set up all day, every day, all they do is loans, will probably give you a better training ground for, okay, here's a highly efficient system. That's why I say go work for a high producing loan officer, because you know you can basically just insert yourself in that machine and go, oh, okay, this is how they do it, and this is how they set up loan consults, and this is how they advise people on purchasing and show scenarios 3 versus 5% and whatnot. And you're just going to learn a lot by being around people who are doing it at a high level. Not to knock banks, but there's not many people doing it at a high level at bank. Maybe I'm biased. I don't know. Sergio, thanks for joining. What are my chances of getting a loan if I have 1 year of self-employed? I know it's possible. If you've only been self-employed for 1 year, like brand new, no chance you can get a conventional loan. You can go get some sort of non-QM loan. But as far as a conventional loan, the guidelines are going to pretty clear. 2 years of self-employment needed. So whatever you do, make sure you talk to somebody who knows what the heck they're talking about and does a full-fledged pre-approval. If you don't mind the terms and you've got 20 or 30% to put down, there are going to be programs that like I said, are non-QM type loans where you can go off bank statements. You can go off the debt service of the property you're buying if it's investment property, but conventional loans, no can do with 1 year self-employed. Sorry. Zeta, how you doing? Thanks for joining. Appreciate the support as always. Eric, asking about that home possible loan that my buddy Joey's so excited about, where you can put 5% down on a 2 to 4 unit, not starting until November 2021, so not available yet. But Eric is asking, if you're not income eligible, make too much money, can't qualify for home possible, what's the lowest possible down payment on a 2 to 4? The answer for it is if it's owner occupied, you can buy a duplex with 15% down. If you're buying a 3 or 4, you need at least 20% down. If it's owner occupied. So yeah, there's that. If you make more than 80% of the area median income, don't qualify home possible, you're gonna have to either go FHA 3.5% down or a larger down payment. Jorge, current lender is a local broker, but the rate is not the best one I was offered. Best way to approach that with lender. I mean, I guess it depends on what the difference is. Generally for me, if somebody comes to me and says, "Oh, love to work with you. I've, followed you. Your team's been great, but I'm being offered this 2.625 here." I just say, "Show me." And then I look at it and go, "Yeah, 2.625 with 2.5 points of cost. That's ridiculous. I would never advise that. I could do that lower rate and I could, have you pay 1.8 points, which is less than what this person is quoting, but still that doesn't make any sense. Based on your credit, based on your down payment, based on everything, let's go 2.875, no points being paid. Much better for you long term, not baking in $7,500 worth of point cost into the loan. And so, just if you got a good broker, just talk to them. Sometimes you might search far and wide and find someone who's willing to work on no margins and, gamble with your financial future by saving on eighth and rate, but it's a company that might take 60 days or not be able to close it all. And in those cases, I just tell people, good luck. If you'd like to gamble, go ahead and gamble. If you want the sure thing, my team is available and ready to roll. All right, let's talk the home possible. All right, back to it, Joey. Joey wants to talk about this for an hour straight. If there are others renting other units, how does a monthly income factor in with that extra income count towards the borrowers? No. So your area median income is just your income. You don't have to count that other qualifying income that's going to come from the, what do they call it? Not future rent. They call it, the rent from the other units. I'm blanking on it. But anyhow, you don't have to count that towards the income qualification. So you can just look at that AMI and make sure that you're under that 80%. You know what, Joey? I'm gonna write this note down. I'm almost positive. I mean, if that was the case, that would make it so like nobody friggin' qualifies, right? Because let's say you buy a 4 unit and you make 50 grand a year, you add on the rental income and then they don't qualify. Like, let me see. 80% AMI includes rental. Okay. I'm going to get that question answered, Joey. Next Monday, 6 o'clock. I am going to answer it. Faux show. As long as everybody listens to Jorge and smashes the like button for the YouTube algorithm. Rossi Perez, is 3.12 interest rate good enough for refinancing? Good enough as in that's the rate you're going to refinance to, or good enough like that's what you currently have? I don't have enough information here to answer the question. So yeah. All right. I'm trying to pull something up. I'm trying to not lose the flow. I pull something up for somebody. All right. Bradley, thanks for joining. Do they have bank statement, DSCR loans for anything like that for jumbos? I have a client who qualifies with flying colors. He went from W-2 to self-employed. Yeah, a lot of those companies do, Bradley. I would hit up Home Point if you can broker to them. But a lot of those different DSCR or bank statement loans, they'll have like a $2 million max. So like they don't have to fit into the conforming loan limits. So, it's not even considered a jumbo. It's 300 grand. It's 800 grand. It's all same qualifying, and they'll go up to whatever. Do builders have to sell houses to primary residents first, then to investors? I am new, so what is the regulation around builders selling to primary? I think builders are just selling homes to whoever qualifies and whoever wants to buy them. There's no guideline on they got to sell a certain amount to owner occupied. Joey, there you go. Smash the like button. Joe Murillo, are you AIM Fuse 2021? For anybody who's wondering, this is the biggest mortgage conference of the year for mortgage brokers. He's asking if I'm going. The answer is a resounding. What's the word? Yes. Wouldn't miss it. Biggest, best mortgage conference of the year. If you're a mortgage broker, you should be going. I'm going to show you something, Joe. A reason why I'm definitely going. There's me on a panel Friday at 11 a.m. Not a big fan of this headshot, but was invited to speak on this panel. I think I'm after Matt Ishbia, but before Magic Johnson, somewhere in there. So exciting stuff. I'm looking forward to it. That's something I always look forward to. Great friends in the broker channel, great people that I learn from. So excited to get out there and share some of the best practices with my fellow mortgage brokers from around the country. Here's another one offer accepted, set to close on October 8th, Uruguay. Congrats. Good to hear. Viquez, buenas noches. ¿Cómo estás? How long does it take for hard inquiries to come off your credit report? You know what happens, Dorothy, is on your credit report, it's such a small percent that people really sweat this, and I don't think they should. If you have 10 hard inquiries in the last 12 months, then let's say that your oldest one is 11 months old, and then you've got one that's 10 months old, and then you've got 3 that are 9 months old. Next month and the month after and the month after that, that one's going to fall off. The next one's going to fall off. And so it's looking at how many hard pulls you have in the last 12 months. And so if you have one now, it's going to be like forever rolling, like how many are in the last 12 months. So really you should be looking at like, oh, did I pull it at Best Buy? And I also pulled it at the car dealership last October. Once those pass a year, then those will start falling off on the back end. But really, like the 3 or 5 points that a hard inquiry dings you is really less to be worried about than, like, some people sweat about that. Like, I don't want my credit pulled because it's going to affect me, and a hard pull is going to do this. And like, meanwhile, they have a $997 balance on $1,000 Home Depot card. And then they've got a $500, Capital One where their balance is 521. It's like over the limit. Like, pay those down and your credit score goes up 40 points. Don't sweat the hard inquiry that's going to knock you by 3 to 5. Just my 2 cents. Jorge Guzman. Diamonds. This is diamond hands. Is this Dogecoin? Nicole, this is a good question. I literally just saw, where did I see this? I saw some sort of Fannie or Freddie, some guideline update in regards to ADU income. I'm fairly certain you can use it now. ADU rental income. I will find out, because this is literally like in the last week that I think you can now. There wasn't proper guidance on it before, but gosh, I saw it. I'm sure I saw it. ADU income used to qualify. I'm fairly certain. Next Monday at 6:00, please tune in. I'm going to find out. When closing, what precautions can you take to make sure you are wiring the money to the correct account? There are many stories of people posing as a title company, intercept the money. Lee, great question. I would love to take a minute right now to let everybody know. All these people that got their offers accepted, this is great for them, right? Make sure before you wire your money to title, which always has been the best way, most efficient way to get your money to title. You just wire it in. The lender can see that it came from this account that we have on file and it went straight to title company. It's your name. It's yours. It's efficient and easy, but you got to make sure it goes to the right place. So you call the title company and you talk to them and you say, I just wanted to double check your wire instructions. Okay, you want to read them or me? And you can do it either way. Title company go, okay, it's this bank, routing number 027423926, account number 724698253. Okay, we've got the same one. You wire it, right? Because like you said, you're dealing with Sandy Smith at Chicago Title, somebody who can hack into emails, and this is how it usually happens, creates a sandy.smith at Chicago Title with like TITTLE.com. Or they even do like a Gmail, sandy.smith.chicagotitle@gmail.com. And then you're just like going throughout your day. You're not really thinking, you're not checking where the email came from and that it's a Gmail. But they pose by creating an email that's really close to that old Sandy Smith email that's really coming from Title. And they say, here's your wire instructions. Make sure you wire it by noon today or something like that, right? Always, always, always call the title company, confirm it. It takes all of 1 minute and it basically saves you from wiring tens of thousands, hundreds of thousands to the wrong spot. Retail lenders like a mortgage broker. There's retail lenders like Movement Mortgage, Big Valley Mortgage, Summit Funding. Those are retail lenders, and then mortgage brokers are a different type of setup, but they're mostly self-gen from my experience, whereas banks are like people walk in the bank and they're like, hey, I've banked here for 40 years. Charge me whatever you want. I'd like my loan with you. And then, you can get loans that way. Is MLO paid just commission or salary? Generally, it's just commission. You can get some sort of positions in mortgage where you're getting paid a salary. But if you're a loan officer, 9 times out of 10, that's just commission. And truth be told, you want to be in a position where it's 100% commission because then there's no ceiling, right? The sky's the limit. More loans you bring in, the more you make. Whereas if you're on salary or something and you're just making a flat salary, you might find a combination of the two where you go work somewhere and you're like, okay, I'm going to do these activities. I'm going to be paid a base. And then if I bring in loans of my own, I'll get paid a commission on those. You can find something like that where you learn as you go. Not too bad of a gig. Closing on a house in 3 days. Congrats. Pipa Lotum. Thanks for joining. I signed a rate lock and disclosure in late August for refi with Citi. My refi is with underwriters. On Friday, I got a new rate doc to sign and had me paying a point. Oh, gosh. If you had a signed rate lock and there was no points, and then you got a new one and had you paying a point, I'd be pissed if I was you. But the only thing that could have or should have changed, especially if it's locked, is if they had to extend, right? Like if you started this thing in August, say August 20th, and then they did a 30-day rate lock and that's expiring, and now they've got to extend it, it wouldn't cost a whole point. It might cost a little bit. But I would ask them. This is a question I would say, like, what happened? Why am I being charged right now? And then if they don't have the right answers, you just tell them, I'm calling Matt the mortgage guy. He's going to set me up. Nice. Come find me, Joe. Come say what's up. I'll moving and shaking hands, kissing babies. Lots of awesome brokers at Fuse. So make sure to say what's up. Will SB 9 and 10 send single family through the roof? Let me see real quick. Oh, is that the one where they're trying to with accessory? I feel like they've done something similar already. Like they were talking about making like it easier to add accessory dwelling units and like streamline the process and do all that. So like this new single family zoning law, like I don't know. I don't know if it's going to really do much to single family housing costs. What they do? They got rid of single family zoning, so now you can this one I remember like back in July, I was at some meeting and they were like, this is the wrong way to go about solving the affordable housing crisis. I don't know enough about it to really go into detail about like how this is going to affect home prices, but maybe we circle back. SB 9, SB 10. A lot of times, like mortgage guidelines, some of these laws, like everyone's like, how is this going to affect? And people, mass foreclosures coming out of forbearance, like what's going to happen to the housing market? They have much less impact than people think. And this is probably one of those, my guess. Inquiry, 12 months to stop affecting, 24 months to come off. All right. So it sounds like Jorge's chiming in on the credit question from earlier, where, it takes 24 months for them to come off, and then 24 or 12 months to stop affecting. Because I think a lot of this algorithm is built around like how many pulls do you have in the last 12 months. And Joey also said it's a very small percentage of your scores. So yeah, I mean it's like 10% or something. Alvaro Vargas, thanks for joining. Similar to that question on rate refi, I went from a 4.875 to 3.125 on your rental this January. That's good. Kevin Hawthorne, hello. Out in Florida. Hope you're well, my man. Thanks for joining. Appreciate you being here. All right, Harminder. This is a very good question, very topical question. People want to know, when the Fed stops buying mortgage-backed securities, what is going to happen? Some people think in their October meeting they're going to start. Some people say not until November. Some people say no, they won't even do it this year. But by them buying 100 billion plus of mortgage-backed securities every single month, they are artificially keeping interest rates low. Once they stop buying mortgage-backed securities, then that yield is going to have to rise to get other people to buy mortgage-backed securities. Because if they're not buying it, they got to have somebody buying them. And if nobody's buying them at this yield, then they go up, and they raise it, right? And so it's not going to necessarily take liquidity out of the system for lenders. All it's going to do is increase mortgage rates. And I don't think it's going to have a huge effect on mortgage rates because they're like they're not going to do it quickly. They know better, right? They've seen how that's played out before, and they know better than to do that. So when they stop, they won't necessarily just stop cold turkey. They'll taper, and they'll go from 120 billion to 110 to 100 to 90 to 80 to 70 to 60, like that. And so it'll be a slow tick up from 2.875 to 3 to 3.8 to 3.25, and rates go up 0.5% over a 6-month, 9-month period, which isn't, devastating for the real estate market or anybody for that matter. That's my 2 cents. Nate and Jess, thanks for joining. Great to see you guys on here. I'm going to give you the link to my friends at U Mortgage. They are nationwide. I keep hinting it, but I don't want to hint it too much because I still want it to be a surprise when the video gets dropped and the announcement is official. Like mid-October probably. But I'm sharing this U Mortgage link. You go to greatmortgagebroker.com, you fill out 6 little things. Directs you to U Mortgage, licensed nationwide. Brandon Evans, my team over there, is going to take good care of you. I say my team because I used to refer it because I like those guys. Now I'm actually part of the team. Currently in transition to U Mortgage. So within 6 to 9 months, I'll be licensed in all states. For now, I'm still just California. But there you have it. Making a move to U Mortgage. You heard it here first. Won't be official till mid-October. So don't tell nobody. Coming soon. Eric, is there an interest rate difference between second homes and owner-occupied loans? It's a very small difference. Owner-occupied and second homes are very close. And then there's, 3/8 to 0.5% difference with investment property loans. But 10% down second home versus 10% down owner-occupied, very, very close. Good evening, Kimberly. Thanks for joining. Good to see you here. Nate and Jess, no problem. Yeah, check out that link. Depending on what state you're in, it might be a different loan officer helping you out, but licensed in most of the states now. U Mortgage will be able to help you out. Great company. Trust me. I vetted them. Very good. All right, Joey's got some insight. Joey's got some stuff to share. Sharing some advice here. Bought in March 2020. The lender told me I've never seen upfront PMI this cheap. I put 5% down. Based on where my home value is now, I probably have 20% plus equity. I never should have paid upfront PMI. My advice, pay monthly PMI. You're probably right. As cheap as upfront PMI is, like mortgage insurance in general is just cheap. And yeah, so you paid that upfront MI, or some people bake it in and have a slightly higher rate to not pay mortgage insurance, but good credit, 5% down, your mortgage insurance might be $64 or something, depending on the loan size. It's never been cheaper. And I think it was Zillow. Somebody, like, as hard as this is to believe, we might see 10% home price appreciation in the next 12 months. I don't think there's any chance we see 17 like we've seen, but we might just see double-digit home price appreciation in the next 12 months. I think it's crazy to even say that out loud, but I'm just speaking from whatever is in my brain and on my mind. I didn't think this like a month ago. And now I'm like, you know what? There is enough stuff going on that is continuing to push home prices higher. And there's enough demand. There's truly enough. When you look at, like, well, it was said really well by another loan officer. I want to give him credit for it too. But there's like able to and willing to buyers, right? Where like X number of people qualify and are able to, then there's X number that are like willing to pay. There's more than you would think in both those categories right now. Willing to buy and able to buy at the prices we have today and at 10% more expensive. I promise you that. As much as people think no, you look at those 50-year charts that Mike Zuber puts together, and home prices compared to mortgage payments compared to income, more affordable than 90% of the last 50 years. Hard to believe. When you look at some of the stuff in California, you're like, that's 500,000. It's hard to believe that when you compare the mortgage payment on that versus the annual income, it's cheaper than it was 5 years ago. It's cheaper than it was maybe not 10 years ago. 10 years ago is pretty darn cheap. But historically, it's relatively inexpensive compared to the past. All right, enough about that. How can you pay PMI monthly? If you put down less than 20%, Kim, and you get a conventional loan, you'll have a monthly mortgage insurance payment, right? And what Joey was talking about was on his loan, he had the option to just pay it off. He paid $3,000, $4,000, $5,000 up front, didn't have mortgage insurance on there at all. But he realized, like, gosh, here I am a year and a half later, I've got enough equity to let that fall off or apply to have it fall off. I could have paid $70 a month for 18 months. That would have been cheaper than the $5,000 I paid up front. No, the way it works, Kimberly, this is another good question about, like, how do you pay that PMI? When you get your first mortgage statement, every mortgage statement thereafter, it's all going to be bundled up, where it's principal and interest, taxes, insurance, and private mortgage insurance. And your total payment is $2,124. Portion of that goes towards mortgage insurance. A portion of it goes towards your escrow account for taxes and insurance, and the portion goes towards principal and a portion towards interest. And so mortgage company collects the whole amount and distributes it accordingly. Do I have a non-QM with 10% down? I do not. I'm sure there's something out there, but I'm not in a position where we're doing a lot of non-QM. I probably refer most of this stuff out right now. We're just too busy with the conventional stuff to be exploring and digging and trying to find all the non-QM stuff that's available out there. Not many companies are doing less than 20% down. You'd be hard pressed to find someone doing 10%. All right, Jason, thanks for joining. Your primary home is worth 500. You owe 220. I have a real estate LLC with a good credit score. I have a real estate LLC with a good credit score. How would you suggest me to legitimize the LLC? LLC by primary residence, refi through LLC. Most every single lender is going to require it to be personally guaranteed, and they're not going to lend to an LLC. The only companies I've seen that lend to an LLC are these non-QM lenders. In that case, you're paying a percent higher in rate, 1.5% higher in rate. So, what more investors do, which makes more sense, is you refinance it in your personal name, get the best interest rates, and you can grant deed it to your LLC. All the stuff that I did for my personal properties, my name, my credit score, my income, and then for liability reasons, gets transferred to the LLC, falls underneath the family trust. So yeah, I mean, lending to LLCs is not something that I see as very common. The lenders that do it charge a premium for it. Good evening, 33. Okay, Alvaro, I got to find your first comment. Oh, I think you were talking about you went from 4.875 to 3.125 on your rental. You didn't take any cash out. Now you're looking to move back in and cash out refinance to renovate. If you move back in and then you do a cash out refinance, a cash out, if you've got a good credit score and you've got enough equity to where your LTV is under 75, you should be under 3%. Yeah. So you should be able to take cash out and lower the interest rate, which is basically your question, right? No problem, Kimberly. That's what I'm here for. Q&A. If I wasn't providing the A, then we wouldn't have a Q&A. So I appreciate you bringing the Q's. I'll bring the A's, and we'll have this Q&A every Monday. We'll all learn a little bit. We'll have a good time. Music Lover 78 Abel. Can you tell me what Homestead is for? I received this in mail after I closed on a refinance. I think it's like a discount on your property taxes, right? If you apply for Homestead, it's like you save $66 off the $5,000. And I can't remember. I've seen that before, but go ahead and send me that if you want me to review it. But I think it's legit. I think you just check a box and say, yeah, I claim this as my homestead. And then instead of $49.80, you pay $49.17 every year in property taxes. You get like a smidgen of a discount, something like that. All right, 33. Got a question on a VA mortgage? Ugh. Sorry for the yawning. Somebody called me out on that. It was like, you got to stop yawning. I'm freaking tired. I'm working my ass off. Expect. I don't know. Maybe I should do some jumping jacks like mid stream. It's just the end of my Monday, so it's late. I've been at it since 5:20 this morning or something. So 13 and a half hours in, my old behind's getting tired. Okay, VA mortgage loan. I'd like to refinance it for a lower interest rate and do a cash out refinance, but I have a late payment last January 2020. You should be fine. If you've got one 30-day late and it's 18 months out, I bet you can still get a loan. Give me a holler. Matt at mattthemortgageguy.com. I'll put that in the comments. Matt at Matt the Mortgage Guy. I'll connect you with somebody, whatever state you're in, and get you dialed in, because I think that that shouldn't hurt your chances unless you got other credit problems. But wouldn't imagine it pulls your credit score down that much. You got a decent credit score still, and that's your only late, and it's 18 months out. You should be all right. Yeah, my answer is I think you'll be fine. There you go, Joey. What are we at? You're like the enforcer around here. We got 42 people watching. So we should be at, like, let's try to bat 750, right? Let's try to have 30 likes. Oh, I nailed it. Nate and Jess confirmed it. Yeah, it's a discount on your property taxes for your primary residence. It's not much to write home about, but I mean, I guess it's every dollar counts. And from what I remember, it's like a check of a box or something. It's not nothing, some huge application. So, yeah, go ahead and do that. Oh, there we go. It's just saying that the homeowner's occupying the property. Yep, it's your homestead. Get that discount. One of my main points is to profit through the LLC. So I'm thinking to go the 1% higher note from one of these LLC style lenders. All right. Yeah, you just got to reach out to somebody and ask them if they do non-QM lending and they can lend to an LLC, and then get it done that way. All right, Harminder, my credit union is offering me 2.625 on conventional at 30-year fixed. Can I do better going to a mortgage broker, and should I? Depending on your scenario, down payment, credit score, and all that stuff, it's probably going to be pretty close between mortgage broker and credit union. And then you just decide what else is important, right? Do you need somebody who can close quick so you can write 21-day offer? Do you need somebody who might answer a text on a Saturday versus Monday through Friday from 9 to 5? And, what fees are associated? Is there underwriting and processing and other stuff that's being charged by the credit union that may or may not be charged by the broker? So, yeah, just take a look there. Because, I mean, credit unions are generally better than banks, but not by much, right? There's a few in my market in California that are pretty good. So I wouldn't feel like too bad about somebody going through a purchase with a credit union, but I always lean towards a highly efficient and well put together broker team to be able to close your loans really quick. And that just, if you're in a competitive market, most people are, it's important. All right, One Life. Hopefully your computer's not frozen. The answer is no. No non-QM at 10% down. Sorry. Wish I did. It'd be a popular product, that's for sure. All right. Credit scores in the mid 700s. Yes. Shoot me an email. All right. Nate and Jess, remind everybody too. Let's see where we're at. Credit scores in the mid 700s. Yes. Shoot. 32 likes. We're getting up there. That's pretty good. All right. Here's a fun one, Mona. Could you please explain house hacking? I would love to. And I think that, like, if anybody's interested in real estate investing, there's tons of great channels. There's tons of great content all over. I listen to every single Bigger Pockets podcast from episode 1 to 400, probably. As a real estate investor, that was a place where I got a ton of my information. Now there's tons of great investors on YouTube. I got to shout out my buddy Mike Zuber. He's got a channel called One Rental at a Time. He talks about real estate investing and adding one rental at a time. But in regards to this question, Mona, house hacking is, like you said, there's multiple different ways to do it, and there's different people that explain it differently. But for the most part, you are purchasing a house or a multi-unit. We're going to live in one unit or one room, collect rental income from the other rooms or the other units or both. That's going to offset your mortgage. So you're like, it's a way to house hack, right? You need a roof over your head. You need some place to stay. You might as well hack and have somebody else making those payments. So, for example, in the Bay Area, which is close to me, the San Francisco and California, housing is ridiculously expensive. You could buy a nice house and rent rooms for $1,200, $1,500 in some areas. So you might be able to buy a house that you could never afford to make the payments on your own, and you've got 3 roommates each paying $1,500 a piece. To rent an apartment, they'd pay $3,000 or $4,000. So $1,500 is a smoking deal for them, and they're commuting to Amazon or Facebook or wherever the heck they work. And so that's one way to house hack. You got a $5,500 mortgage payment. You got 3 people paying you $1,500 a piece. So your payment is only $1,000 a month because you're getting $4,500 from the other 3 people that are essentially tenants of yours in the other rooms. And you bought $1 million property, you only pay $1,000 a month to own it, control that asset, right? Or you buy a 4-plex, you live in one unit, you rent the other 3. And in some of those scenarios, you're living for a discount, you're living for free, whatever it is. And then, the beauty of that is once you outgrow that stage of life or your investing career and you move out, then in the house situation, in the single family, maybe you rent that 4th room and now you've got 4 people paying $1,500 a piece, or maybe you rent the whole thing for a certain price, or, you've got a 4-unit, each separate apartment is renting for $1,000 a piece, and you're paying your portion or your mortgage. You move out, rents have increased. Now it's 1,200 times 4. I've got people that bought stuff in Sacramento 5 years ago that paid $300,000, and now they've moved out of that 4-plex, and each unit is like $1,300 in rent. So that thing's collecting like $5,200 in rent, and the mortgage payment is small on something they bought for $300,000. So really cool way to get started as a real estate investor. It's a really cool way to lower your housing expense. You're sharing it with other folks. All right. 33 Naughty. I'm in Florida. As of last month, my home was appraised for $539 and you owe $234. I want to take out about $200. Here's the thing about cash out refinance is 80% is the max loan to value. So 539 times 80 equals 431. 431 is your max loan amount. So you're pretty close. Let's take into account lender fees, title fees, prepaid tax and insurance. And let's say that all that stuff plus the payoff of 234 equals about 241. And then your new max loan amount's 431, about 190 in cash, right? Cash out, as long as you qualify. Something you could do. So yeah, hit me up. I'll connect you and we'll see what we can do. When should we buy? I'm sticking with my original thought stance on real estate. You don't wait to buy, you buy and wait. This year, last year, the year before, and next year, and the year after. That's what I'm buying. That's what I suggest for you too. And really, if you're buying it as a primary residence, it's more of a function of when you're ready. You feel good. You've got a down payment saved. Your credit's good. Your job is secure. You can afford, and you've been pre-approved. And in the neighborhood you want to live in, the house size, the size house you need, You're gonna be able to buy it. It's going to look similar to what a rental payment would be. Then it's go, right? And it's time to buy. If those things aren't in place, if you're like, man, I don't have enough down, so I got to use down payment assistance, and my credit's 670, I really want to increase it. Like if that's the type of conversation, the type of scenario you're in, then wait. I promise you, houses will be for sale next year and the year after. There's no reason to rush yourself into buying. But if you're ready to buy, you're qualified to buy, you're comfortable buying, buy. Buy now. More often than not, people talk about buyer's remorse. People have renter's remorse. People who were talking to me in 2018 about buying, who continued to rent and are still renting 3.5 years later, have renter's remorse. They feel upset with themselves. They didn't buy in 2018, and their rent's gone up 30% since then. So that's my quick rant advice. Good to see you in Sacramento. Whenever you're ready, contact my team. Go through the pre-approval process, whether you're buying now, 3 months, 6 months, 12 months, never buy at all. It's fine. Just get yourself pre-approved, get some good information from us. Let us pour education all over you. Here's what you qualify for. Here's what it's going to look like at 350, 375, and 400. Let us connect you with a great realtor, all that stuff, right? And if you don't want to buy after all that information, after all that education, all good. We're going to be just fine. But do that so that you're ready if something comes along you want to buy, and also so that you're educated if you're not buying now and buying in the future. You've gone through that and you understand it, right? That's my advice to you. 20% down. That's it. Whether it's a debt service coverage ratio or bank statement loan, they're pretty similar. You're going to pay about a 4% rate and you're going to put 20% down, and there's going to be more fees than a conventional loan. But, those two things don't necessarily go together. Like, hey, I'm going to use non-QM, but I want the smokiness deal. That's more like, I don't qualify for conventional, but I want to buy. What you got? And I'm like, 20% down, 4% rate, a point in cost. You ready? Let's roll. If you find a good enough deal, then it's going to pencil with those terms even. Jason, thanks for joining. This is a good question. Can a broker show me options for both FHA and conventional before I apply, or do I have to apply first? I mean, here's what I'm going to say on behalf of me and my team. We are what I like to consider a well-oiled machine. We are able to sort through and, advise, help, educate hundreds of people per month. And with that, like, it becomes a little bit of exercise of capacity, right? Where like we have to make sure that we're not spending a bunch of time on folks who may not be like willing to also invest. And so that's why I tell people, get us an application, get us all your docs. We're happy to go through the pre-approval process. I'll show you all the options, because in general, somebody who's willing to do that stuff is a more serious buyer. And if you want to see FHA versus conventional, one, we've got to know what your credit score looks like. We've got to know what you've got available for a down payment. We want to be able to give you good personalized advice. Without an application and docs, we're all guessing. You're guessing your credit score. We're guessing like 670 versus 692 is different advice on like FHA versus conventional. And I can tell you with absolute certainty, any broker who's busy and does any level of business is not going to be like, if your credit comes back at 670, here's conventional versus FHA. If it comes back at 690, here's that versus that. I mean, it's just to exercise in a bunch of variables, which inevitably is like things are going to change. And by the time you get pre-approved and want to buy a house 6 weeks from now, rates have changed and it's all for naught. Right. So maybe is the answer to your question. And my advice is probably, if you come to me with that question, is like, Just apply. There's no harm in applying. I mean, I'm the one that's out $33 to pull your credit. Doesn't cost you anything but a little bit of time. And in return for your time that you spend doing the application and getting your docs in, you get personalized advice. You get advice that really means something. Eddie, great question. When house hacking, can you use the rental income from the rooms to qualify? Unfortunately, you can't. The guideline on this says that if you have history of what they call boarder income, BOARDER, like boarding in your house, then you can use it. But who the heck has like history of boarding income? So if you were living in a house prior to buying the house you're buying, and you had two roommates paying you $1,000 a piece, and you had history of that for 12 months, and you could prove it, they'll let you use it. But nobody has that, right? And so, like, using future projected income, like you can when it's separate units, you can't when it comes to rooms, right? So if this is a triplex, you can use the future rental income from units 2 and 3 while you live in number 1, but you can't buy a 3-bedroom, live in the primary bedroom, and take rental income from the other 2 bedrooms, which doesn't make sense. It's like the same thing, but I don't make the rules. You are welcome, Mona. I think there's some non-QM out there. I'm not sure. I'm trying to do less and less non-QM mortgage, to be honest. I don't know if I said that out loud, but I could look into it for you. One Life. If you're in California, shoot me and the team a message, matt@mattthemortgageguy.com. You got questions, we got answers. I got your back. Trent, how's it going? A lot of people who refinanced last year with 3.25 interest rates now getting cash outs. I heard a bunch of big lenders, i.e. Rocket and UWM, are trying to push this. I don't know if they're pushing it per se, but people are doing it. Like, it's crazy the amount of home price appreciation that I've seen. And, truth be told, debt can be a powerful tool if used correctly. I know people that, because they trust themselves and they love 3% debt, are pulling cash out of their house and deploying it in other investments, whether that's real estate investments, stocks and bonds, or a small business, or whatever it is. If your house went from $350,000 to $550,000 over the last 3 years and you only owe $220, you can pull out $100,000 and you can borrow it at ridiculously low interest rates. And if that $100,000 put into a business is going to 5x in the next 3 years, probably well served putting that into the business. My guy, I didn't realize I had my ringer on. All right. Jocelyn. Husband works commission-based job. Only been working commission for 15 months. It's gonna be it's gonna be tough. Yeah. See, this is the problem. He's got an hourly wage of 14, then he gets commission on top of that. If the commission is only been for 15 months, more than likely only gonna be able to use his base, which qualifies him for a lot less. I wonder, he's never worked in a similar field where he got commission, because I would think that some lenders might allow for you taking that 15 months of commission and dividing it by 24, taking a 2-year average, but I don't think so. Probably got to get 2 years of that commission to be able to average it. Yeah, that's tough. You know what, Jocelyn? It's all right. Those next 9 months are going to go by quick. Then you'll be ready to roll. Miss Taylor, good to see you. Thanks for joining. Just confirming. that earlier question that homestead lowers your property taxes. Thanks, Harminder. Buy and wait. Don't wait to buy. The end. Oh, you know what? You're VA. My bad. Yeah, we can go up to 100%. That funding fee counts as part of that 100%. So it's really like, 96.7 if you've got a secondary use of that funding fee. If you're exempt from the funding fee, then you're all good. But yeah, I forgot that part. My apologies, 33 naughty. You can go higher on a VA loan. So getting that 200 out, no problem. See, you gotta keep me on my toes. I got about 20 minutes left. I'm gonna go about an hour and a half tonight. So get all the important questions in quick while you can. Don't have renter's remorse like Just Land. It's all right. We're gonna get you into something soon. About 9 months soon, I think, if your husband's got that variable income or the commission income. All right, 65K HELOC at 5.3 on investment property. Have been offered a refi to 90K. $5,200 in closing costs. I mean, what are you going to use that 20 grand for? Because on that low of a balance, I guess it depends too. Like, is this HELOC adjustable or is it fixed at that 5.3? Because that's something where it's like, it gives you some peace of mind to fix that thing. But balances this low, 65,000, it doesn't make sense, even though it seems like it, right? Like 5% to 3%, a great 2% savings. Well, a 2% savings on 65 grand is only $1,200 a year. If we're paying 5,200 in closing costs, assuming these are all closing costs and not some prepaids, then it's like a 4.5 year break even. Then it doesn't make sense. So, but if this is like a adjustable rate, and you're like, hey, I just want to get out of the adjustable rate, and then this 20 grand is going to be used to like rehab the property and make it, get another $200 a month in rent, then maybe it makes sense. All right, Kim, if you get pre-approved and do nothing 6 months later, do you lose your pre-approval? You got to freshen it up for sure. They're going to want to repull credit, new pay stubs, new bank statements, and whatnot, because a pre-approval is saying, based on the information I have, we can get a loan done for you. 6 months later, same job, same credit profile, same everything. You're good, but you're still going to have to get it freshened up before you submit offers or get an offer accepted. You want to as well. If anything changed, then you really want to, right? If you had a job change or you had something go on. All right, Carl. Lender has not given me my partial or loan modification. I came out of forbearance 12/20. Anything I do to speed things up, call them every day. Every single day. Until they do something. Like, that's 8-9 months. I see a ton of demand in the rental market, Zeta. I think rents are going crazy. I've heard more and more people where there's bidding wars. Actually, you know what? That's my video tomorrow. Is this new phenomenon where we saw these bidding wars in real estate purchases. What I do, I hit it with my wrist. I hit the space bar. People are offering $2,000 on an $1,850 a month like rental listing. Like, we qualify, and we are willing to pay $2,000 a month as well. I've heard this from people all over the country. It's bonkers, right? But it's happening. So I think rents are going up. Yeah, about that. But I don't know if rate's your most your biggest priority right now, Lynn. To be straightforward with you, not sure if you qualify yet and all that. So work on that. Sorry, did I just come across like an asshole? I didn't mean to. But yeah, like good credit, conventional loan, not paying much points, you're about 2.8% with a broker. This is a good question. I think I got this today in my inbox from somebody. They're like, I want to combine two loans into one. Conventional lending wise, can't do this where it's like, these two properties are collectively worth 600,000. I want to take these two loans and owe 400 on these two, like cross collateralizing type of stuff. You can't do, but there are definitely like blanket loans that investors take, and it's a commercial product that I've heard a bunch of investors tell me up to 60% LTV, you can like refinance the whole portfolio, where it's like, I've got 12 properties. Collectively, they're worth 2.4 million. I only owe $1 million, and I'm going to get 5% money on this $1 million cross collateralized against these 12 properties I own. And they'll do it that way so that they can unlock their 10 loan limit with Fannie and Freddie, which is all you can get conventional lending wise. But there's nothing like this, like Fannie Freddie, to combine two single family rentals into one loan, unfortunately. All right, cool. We'll connect you with somebody in Florida who can help you out with that. Okay, so now same field. He got promoted, but it's partly commission. See, that's the thing, is like the commission part of it, the guidelines are super clear where it's like, we need 2 years to be able to give you, like, it's similar to if you got a bonus at a job or any type of pay that haven't got in the past, need 2 years to average it. So I don't want to lead you astray, Lynn, and tell you that I think it would work. Oh, you got qualified for 435. So maybe that's just using, that's using his 14 an hour and then your income probably, right? And you're right. Like 435 is not going to cut it for Elk Grove. I mean, there's some small houses you can buy in South Sac or 95829 or something, but yeah, it's going to be 9 more months to be able to use his commission. If it's beefy enough, then yeah, maybe your guys are 550 and it makes sense then. Or, as a first time buyer, I'm a big advocate of like buying well below your means. So maybe you're like, you know what, let's just find something for 435 or under and buy that, knowing that we're going to move out of it in 2 years once we qualify for more. Because here's the cool part. You buy something for 425, maybe you even look at it and say, like, what's a good market where I know I'm going to be able to rent this thing for $2,200, $2,300 a month, which I can tell you, like over by Sac State neighborhood that I grew up in, 435 is probably tough, but you can find something that's not that good a shape relatively close to there. And it's going to rent for like 22, 2,300. So if you bought it, I don't know what your down payment is, but get really great financing as an owner occupant, knowing that 2 years later, like your end goal is like, we want to buy something for 550 or 600 in Elk Grove. 9 months from now, once he gets 2 years of commission, now, they can use more income, qualify for more. Let's say you buy this place the end of 2021 and then 2023, you're like, all right, now we're going to buy something for 575 in Elk Grove, can qualify for that. Use departing rental income on the place you're leaving, turn that into investment property, start your way to building massive wealth through real estate. Let's do it, Lynn. Harminder. Yeah, my buddy Brandon can help. Where'd it go? I'm gonna give you a link right here. Harminder, fill this out. I promise you it's only 6 quick questions. Mortgage broker in Phoenix. Fill that thing out. We'll set you up. All right. I'm about to that point where I'm gonna yawn some more, and I want to do that to you guys. I want to bring all the energy all the time. So 5 minutes, I'm gonna wrap it up. If you got anything pressing, let me know. If you want to hear about the Evergrande fallout, let me know. And if you don't, or if you're interested in it, go check out Graham Stephan's latest video, because he really breaks it down in like layman's terms, something that a simple dude like me can understand. Super, super interesting. That Chinese developer that's $300 billion in debt and defaulted on their interest payment. They were asking their employees to lend them money. They're like, if you don't lend us money, you're not going to get your bonus. So employees were like getting money from their family and lending it to the company. And the company's like, I don't know. It sounds scary. Sounds like this company's going to crash and burn. They've got like a bunch of construction on different things, but I think single family is like a big thing they're doing. That's like half built. Can't sell it. They can't get the materials fast enough. They don't have the money left to complete some of these projects. It's a real debacle they're in. All right. Question from California. Most ridiculous Melrose amount you've heard. You talking about 1,300 for a month? That would be crazy. I mean, I've heard of there's some areas near me where, the property taxes are like double. You go from one neighborhood to the next, you're like, oh, it's 5,500 a year in this neighborhood, and it's 11,000 over here because there's all these Melrose taxes. For anybody who doesn't know, Melrose is, taxes that are put in place because they're building a park, they're building a school, they're doing this, and so they're taxing the property owners to build that stuff, which is like, okay, you enjoy that incentive, right? Or you enjoy that perk of that community, but you pay for it too, right? 1,300 a month is wild. All right, Mona, I'm going to give you the link to my buddy Graham Stephan. This guy is good. Really good. Everything is falling. Copy. See, I help out my buddy Graham Stephan because he's a small YouTube channel. He's got this on his videos. So I bought one too. Do epic shit. So there you go, Graham. Helping you out, buddy. That's the link to that latest video he put out, which is good. It's a good explanation of what's going on over there. Jorge, great question. This is the one I'm going to end it on, unless somebody has something good to ask, or else I'm gonna answer and run for the hills. I appreciate everybody here. I appreciate everybody who joins every Monday. This is always lots of fun for me. So keep coming back. Invite your friends. All that good stuff, right? If appraisal comes back with one lender, do you have to get another appraisal done if you choose to go with another lender? Not usually. Most lenders will allow you to transfer the appraisal. If it's within, last 120 days, you can usually transfer it. Most lenders will allow that. They want the business, and, some lenders won't, but most will. So that is the answer to that question. Thank you for coming to the live Q&A every single Monday at 6 p.m. Pacific Standard Time. If there's something that I haven't covered you'd like me to cover, please feel free to shoot me a message, matt@mattthemortgageguy.com. If you haven't checked out the course, please do so. I've got some great feedback from that, but I want more. I want more feedback about, hey, Matt, you didn't include this. Hey, Matt, if you added this video, it'd be cool. Have a pretty small sample size because it's fairly new. So, I've only got a couple dozen people that bought the course. But if you buy it and watch it and don't like it, just get a full refund. No harm, no foul, right? But if you could do that for me and purchase the course and watch those 12 videos and tell me, here's something you should do, here's something that I think would add value to it, then I can get in there, record some more videos, make it, just more valuable for people. Because the goal really is for people that come across the channel, rather than have to weed through 480 videos, they can go to one spot and say, here's the most important stuff. And these 10, 12, 14, 16 videos are going to give me most of the mortgage knowledge I'm going to need to make a very informed decision. And if you make that very informed decision and you save thousands of dollars, my thought is like the $97 invested in the course, probably pretty good ROI, right? So anyhow, thanks again for joining. Next Monday, 6 p.m. Pacific Standard Time. You know where to find me. Until next time, we gonna see.